All right, hello everyone. Tim Davis here coming to you guys with another market review. Real quick market review. Today is early Monday morning, September the 19th, 2022. Here is a look at a weekly chart of the Dow Jones Futures chart. And just want to just make a normal, quick point out is that we are still in an overall downtrending market, as the trend line would suggest. And we are in the process of approaching an area of support. So this is the level that we'll be watching on this week and the coming weeks. This is the June lows. This level that we're watching. So as we approach this level, we had a pretty interesting week last week as price actually continued to sell off. I would not be surprised to see some type of bounce here in the very, very near future, but it looks like that this 20-period moving average is going to act as a strong area of resistance. So as the 20-period moving average continues to trend lower, we'll continue to see price action possibly bounce off of this level until eventually I think we're going to break this level of support below the June lows. So that's something to watch over the next couple of weeks. And I think this Fed meeting is this Wednesday, so anything is possible between now and Wednesday. If for some reason that the markets don't like what the minutes are after the Fed's set interest rates, that's going to be paying attention to whatever the Fed speak right after they set the interest rates. What's their tone? That will probably determine if we get a rally or if we sell off and break the June lows this week. So, but I still think eventually we're going to break these June lows. And once we break those June lows, all bets are off, folks, because then let me draw a bigger picture here. Let's back this up. This is what we have to face once we break those June lows. This area here is the highs of 2020. And look where we are now. We are right hovering. We're still hovering right just above the highs of 2020. Once we break this support level, we are going to be on track to see the same thing that we saw in 2020. We're probably going to end up testing the lows of 2020. That could play out the rest of this year, or it could play out next year. But I think eventually we're going to test these lows. So once we break the lows of June, we'll probably be below the resistance level that we failed in 2020, and then we'll probably see the zigzag or ABC pattern lower until we eventually hit these 2020 lows, which is what I honestly believe is going to happen over the next year. So that's where we're at now. This week is going to be another crucial week. It's like we had a crucial week on this past week. CPI data coming out. It's going to be another crucial week with the Fed speak on this week. So again, we had a pretty decent sell-off last week. If we look at a daily chart, we'll see that we are hitting some oversold territories after we had a big sell-off on last week. So I wouldn't be surprised to see some type of rally here sometime this week. But I think this 20-period moving average, again, I think the 20-period moving average is going to act as a strong area of resistance, as we did here. Hit the 20-period moving average, and we've reversed here, as we did here. Hit the 20-period moving average, and we reversed. So this 20-period moving average is now acting as a strong area of resistance. So I would not be surprised to see that type of movement as we continue to ricochet off that 20-period moving average as we hit trend lower. So that is the trajectory that I expect to see over the next week or so. And then if we glance at the other markets, everything looks the same. Here is our S&P, same setup. Just hovering just above the June lows and above the highs of 2020. Look at the NASDAQ. Same setup. And in Russell, same setup. So there's no need to have a drawn out market review. Everything looks the same. We are still trending low. We're still in this bad market. The next key level of support is, again, the June lows, which also represent more than likely for all the markets, which represents the highs of 2020. We break these June lows, we're going to really probably start to see the bears really take off and accelerate this market to the downside. In the near term, I will not be surprised again to see some type of little small rally, nothing big, because this 20-per moving average, as you can see, is acting as a strong level of resistance. Even if we crest above it just a little bit like we did here, we come right back down below these 20-per moving averages, just continue to break lower. Now let's take a look at the VIX futures. Again, the VIX futures is still on a nice steady uptrend. And for those who followed last week, I said there's a gap that VIX created around the 15th of August. That gap, folks, I think it's going to remain open for a while, just like the one we saw back in 2020. Let me show you that. The one in 2020, once we hit that big gap after a long sell-off market, I mean, the VIX just really started to continue to go higher until it finally reversed. And if we draw this out again, and look at what happened in back in 2020 with the VIX. See that gap up highlighted in orange? Even though ever so slight, we had a little gap up here as well. A little small gap up in the VIX. Barely see it, but right there, it's a little gap up. So it looks like the VIX is now on a trajectory higher. If you look at this weekly chart of the regular VIX, we see a pivot point here as the oscillator is starting to turn up. And this for stochastic Williams percentage oscillator is starting to turn up, and RSI oscillator is starting to turn up. So my ultimate target in the VIX, folks, is to see VIX get above 40. I think we could see that. Got a couple months left in this year. We could see that before this year is over with. VIX hit that 40 level, maybe pull back a little bit, but I think between now and spring, we could see the VIX really break above 40, probably in a major way. All right, folks, that's all I have to offer you guys. But before I go, we'll take a quick glance at crude, because I still think eventually crude will find a way to reverse. Right now, crude is in it's definitely in oversold territory in a big way. Here's a weekly chart. Crude hitting some support levels. Got to see what happens. But between now and next year, I think crude will eventually find a way to reverse back to the upside. Right now, crude is still in sell-off mode, but we're in deep oversold territory looking at this weekly chart. Monthly chart hitting some strong support levels. So we got to see if crude finds a way to reverse here. But if we break below this level of support, you can see crude also continue to sell. So we got to see how that pans out as we continue to go through the rest of this year. That's all I have for you guys on this very, very short market review, because nothing really has changed. We're still in this strong bear market with a lot of catalysts that's threatening to break the June lows, which will also threaten to break the highs that we saw 2020 and start to really, really accelerate the downside to eventually, I believe what's going to happen is a test right here. Test of the lows that we saw in 2020. I think we're eventually going to test that, but we have to see when we get this break here. Do expect a break right at this level that we're at now. I expect a break here eventually. All right, folks, that's all I have for you guys. Enjoy the rest of your trading week, and maybe pop it in here towards the end of the week after the Fed meeting to see how markets are reacting. All right, have a great one, folks.